Hey, welcome to Just Bull Street. Today's story is about a company most people have never heard of, yet it might be one of the most powerful trading firms on the planet. Let's get into it. So, I want to talk about a company that most of us, I'm guessing, have never even heard of, but they might just be one of the most powerful trading firms on the entire planet. They're like this ghost in the machine of global finance. And their name? Jane Street. And this is where it gets interesting, because this company has two completely different faces. On the one hand, their public image is rock solid. They're seen as one of the world's leading liquidity providers. They make it easy for all of us to buy and sell things. But then there's the side that's been accused of systematically manipulating markets from India all the way to Bitcoin. It's wild, right? So what is actually going on here? Okay, so let's start with their official story, the one they tell the world. In their eyes, they aren't just traders. They're more like architects of the market. Right, so if you look at how they describe themselves, they use terms like market maker. What does that actually mean? Well, in the simplest terms, when you go to buy a stock or an ETF, there's a good chance they're on the other side of that trade. They're making sure there's always a buyer when you want to sell and a seller when you want to buy. They're basically the grease that keeps the entire financial system running smoothly. And the scale we're talking about here is, well, it's just staggering. We're talking about operating in over 45 countries on more than 200 different exchanges and trading thousands of different financial products. I mean, they are truly everywhere. And just look at this number for a second. $400 billion. That's how much they traded in just bonds last year with their clients. And you've got to remember, that is just one slice of their business. It's just massive. And that really shows you how wide their reach is. They aren't just a big fish in the stock market pond. No, they're a dominant force in ETFs, bonds, options, and yep, even digital assets, crypto. Their tentacles are in pretty much every major market you can possibly think of. But this is where the official story ends. And a totally different, and frankly much darker picture starts to emerge. This is where things get really, really controversial. And here's the thing. The accusations against them, they don't seem to be just isolated, one-off incidents. When you step back, some people are starting to see what looks like a pattern of behavior, and it spans completely different markets. We're talking stocks in India, that huge crypto collapse with Terra/Luna, and even the daily price of bitcoins. Okay, so let's start in India. And this one is important because it isn't just an unproven allegation. This is a verified case where regulators actually stepped in and took major action. So what Indian regulators accused them of was this pretty blatant strategy they called the morning pump, afternoon dump. And the idea behind it was brutally simple. Buy up a ton of stocks and futures in the morning to artificially drive the prices up. And then in the afternoon, dump everything, causing a crash that they themselves engineered and profiting from the fall. And the consequences for this were serious. I mean, we are not talking about a slap on the wrist here. India's main regulator straight up banned Jane Street from their derivatives market and froze millions of their dollars. They flat out called the profits unlawful gains. Okay, now let's jump over to the wild world of crypto, because next on the list is the absolute catastrophe that was the $40 billion implosion of Terra/Luna. And can you guess whose name is right there in the middle of the lawsuit? Yep, Jane Street. Okay, so check this out. A lawsuit claims that Jane Street used confidential inside information from a former intern to profit from the collapse. The suit alleges that just 10 minutes after the project's founders pulled out a huge chunk of money, Jane Street dumped $85 million of their own, which allegedly helped kick off the death spiral that sent the whole thing to zero. And that brings us to Bitcoin itself, and to this really strange pattern that traders started noticing. It was this mysterious, almost predictable price drop that seems to happen like clockwork nearly every single day. So here's the theory of how this worked. Allegedly, Jane Street would dump a large amount of Bitcoin right at 10 a.m. Eastern Time when the market is a bit thinner. This would push the price down, which would trigger a whole cascade of forced selling from other people. And that would let them profit from these massive short positions they had already opened beforehand. Then they just buy the Bitcoin back cheaper and repeat the whole thing. But here's the absolute kicker. You know that 10 a.m. drop pattern? The one that had been happening for months? It just stopped. cold. It ended on the exact same day that the Terra/Luna lawsuit, the one we just talked about, became public. So you tell me, is that just a massive coincidence? Maybe, but it's a pretty big one. Now, to be fair, there is another side to this story. Some analysts argue this wasn't manipulation at all. It was just normal repricing as the US markets opened for the day. Others say it's just a standard, if very complex, trading strategy called delta neutral, which is basically a way to try and make money no matter which way the market goes. And that's not necessarily illegal. It's just, well, it's sophisticated trading. So the big question is, how could one single firm possibly have this much influence? Well, the answer might not be in the company itself, but in the actual structure of the market and some really special privileges that only a handful of firms get. And it really all comes down to these two words, authorized participant, or AP for short. Jane Street is one of the very few APs for the big Bitcoin ETFs. You can think of them as the wholesalers of the ETF world. They are the only ones with the special privilege to create new ETF shares when there's a lot of demand or get rid of them when demand falls. They're the gatekeepers. In this role, it comes with what you could basically call superpowers. APs are exempt from certain short-selling roles. And this is the crucial part. While they have to tell us about the ETF shares they own, they do not have to tell us if they're also betting against those very same assets using other financial tools. So their real true position in the market, it's completely invisible to the rest of us. There's this brilliant analogy for this. Imagine an India versus Pakistan match. One bookmaker controls all the betting slips. The whole country is betting on India. But before the news breaks, he learns that India's star player is injured. The public doesn't know yet. While everyone keeps betting on India, he quietly places a massive bet on India to lose. He controls the slips, he has better information, and he profits because the crowd is betting blind. They can own the tickets and bet against them at the same time, and we would never, ever know. So this brings us to what might be the biggest question in all of this. Is the problem here a single player who's bending the rules? Or is the problem the game itself? Because look, if these allegations are true, the real story here might not actually be about Jane Street. I mean, they might just be the ones who are best at playing the game that they've been put in. Maybe the real story is about a system that gives a tiny handful of players these enormous unseen advantages over everyone else. It really makes you wonder, in markets like this, where exactly is the line between just providing liquidity and helping things run smoothly and actively moving the market around for your own gain? And you really have to ask yourself, has that line become dangerously, dangerously blurry? And that's the bigger conversation. Not just about one firm, but about the structure of modern markets. This is just Bull Street.